Today we will take a closer look at one of the companies in the Sifte fund, namely Applied Materials. This semiconductor production equipment manufacturer based in California is the world's largest equipment maker for the chip factories like Taiwan Semiconductor. The company began its operations in the late 1960s and went public on the stock exchange in the early 1970s, so it's not a new growth company by any means. Applied Materials was added to the Sifte Fund's portfolio at the end of 2022. The decision to invest in Applied Materials was ultimately quite straightforward. And we will hear more about this from Alexander Järv, the portfolio manager at the Sifte Fund. Welcome, Alexander.
Thank you. Nice to be here.
So, would you please shortly introduce Applied Materials? It's unfamiliar to many, so what the company does and how it fits into the semiconductor value chain.
So the company makes, the large machines that you need to build chips, right? And I like to think about the entire semiconductor industry as having like four major boxes within it. So you got the end users, which are the customers. Then you have the companies that make the products that they sell to the end users. So let's take Apple and the iPhone as a good example. And they buy the chips from some factory that makes the chips, like Taiwan Semiconductor, which in turn buys equipment from companies like Applied Materials in order to make those chips. So Applied Materials is in the capital machinery business. And this business can also be roughly divided to four parts. The most important one by value is lithography equipment. But then you also have deposition equipment, in which Applied Materials is the largest, and that's the most important market for them. That's also roughly a quarter of that business. And then you have etching equipment, another quarter by value, and then everything else, which is the last quarter.
It sounds quite complex value chain and complex company to analyze. So how did you get familiar with the Applied Materials, and are you familiar with the sector itself?
Well, the good thing is that we had Lam Research in the portfolio. We had it since 2015 roughly. So the industry was not new to me, and of course this company I was quite familiar with this company when we started looking at it as well. So it wasn't an entirely new effort to dig deeper into this one. And in fact we found that it satisfied all of our quality criteria and was quite attractive at the time that we bought it, and in my view still is.
Yeah, quality business in many ways. And we will look at the numbers, figures later more in depth, but how about the sales and the customer segments? Who are the main competitors or the customers?
So for the customers, the leading edge company, the one that makes the best and newest chips, those are the most important customers. And there you have, of course, Taiwan Semiconductor, you have Intel, Samsung. Basically anyone that builds a semiconductor factory uses Applied Materials equipment. And roughly they spend between 15 to 20% of their investment budget on machinery from Applied Materials. So very important supplier to these companies. And the competition is, ASML, they don't have direct competition with them. The most important competitor is Lam Research, which we also have in the portfolio. But they don't really compete head on. They have the different sub-niches that they're specialized within. So there is no price competition between these two companies. In fact, they complement each other quite well.
So it's not monopoly, maybe more like duopoly, but still not competing head to head.
Yeah, on the higher level it's a duopoly. When you zoom in, they're basically monopoly within different sub sectors of that.
Yeah, so if we take a look at the figures, historical figures, and the revenue and the profits, they are extremely good. What does it tell you about the company itself?
So looking at these figures here, for example, we can see that the sales have been roughly tripled over the last 10 years. This tells us there's a lot of demand for this company's equipment. And of course, the semiconductor industry has been quite booming over the last 10 years. We also see that the gross margins have been steadily improving over the last 10 years. This is an evidence that the company is, demanding a higher price for their services. And that's due to the fact that this machinery gets more sophisticated every year. And therefore, these companies have less competition than before and can charge even higher price. And then lastly, if you look at the figures of the return of investment capital over the last 10, 15 years, we can see it's been A bit volatile because this is a cyclical industry, but on average, it's clearly about 20%. And at good years, up to even 40%. So this tells me that there is limited competition within this segment that this company provides.
Okay. And we know that in the leading edge technological companies, R&D, research and development expenditures are typically quite high. So how about, is it also in same case in Applied?
Yeah, so this company spent between $2 and $3 billion every year on R&D. That's roughly 10 to 15% of the sales, and that's quite consistent over time as well. It's in line with the competition, but as this company is the largest one within its sector, it means that in absolute dollars, they are spending the most on R&D.
So that might be also the reason for very good gross margins, that they have the pricing power because they are always investing in the R&D more and more. And
they're succeeding as well. This year they introduced a new machine called the Century Sculptor, which I'm not going to go into detail, but there's a lot of potential for that one, for example.
Right.
So they are able to innovate still, even though they're quite a big company.
Right. So the historical figures, they look very good, and also the business is very focused, so it fits and meets many quality business criteria. How about the future and especially the barriers to entry? Can we expect or forecast that does this duopoly monopoly situation stay, or are there new competitors coming?
So this duopoly situation has been roughly stable over the last 60 years, and it's not going to change. The reason for this is that making a semiconductor chip today is really, really hard. In order to make, it's a process, it's a manufacturing process, and you need hundreds of PhDs that together over a course of 2 to 5 years develop a very precise process for making chips. It consists of something like 700 different processing steps. Taking a chip from a blank wafer into a finished chip can take up to 1 month of time in the factory. So what I'm getting at is this is a very highly sophisticated process, and once you find everything that works, you can't change anything at that point anymore. So if you have Applied Material machinery, then you're gonna have to, you're locked in with them basically since then.
Okay, so the barriers to entry are high in many ways.
It is basically impossible for anyone else to entrench on the big four.
It's a bit similar like in this Safran, the French aircraft engine company, what we have also invested in.
Yeah, there's a lot of similarities because once you have a airplane engine for a plane, you can't change, well, you most likely won't change the provider of that engine. And also the business model between
aerospace.
And also,
yeah, the earnings model the earnings model is very much similar, that you sell the installed base and then you have the service business there.
Yeah, so like with an airplane, you sell the engine first at cost or even at a small loss, and then you recuperate profits over time by selling very lucrative service contracts to go with that spare parts and service and so forth. The same is true here for semiconductors. Applied Material will sell the machinery up front, not at a loss actually. In this case, they will sell at very high margins. But then they will also, over time, make very lucrative service contracting deals because these machines, they're very critical, and if they go down, is the downtime in the factory, that's many millions of dollars of revenue per day. So Applied Material has a service tech sitting in a booth somewhere in the factory, just ready to go and fix everything at a moment's notice. So there's the same model of selling up front and then getting the revenue also downstream.
So it's very critical product, and the service is there to help if anything goes wrong.
Yeah, roughly 30% of the revenue is from service.
Yeah, okay. Well, how about competitive advantages then? There must be cumulative learning for decades.
60 years.
60 years of cumulative learning, technological edge, of course.
Yeah.
Is it scale also?
That's probably true, but that's not the key part. Technology and the fact that they're very integrated into the customer's manufacturing process, those are the key advantages that they have.
Right, that makes sense. How about the outlook? Are we able to predict the revenue and the profits for the next 3 to 5 years, and how does it look like?
Over the long term, 3 to 5 years, that's doable. In the short term, it's a cyclical industry, depends on the supply and demand dynamics of the customers. So since this is an investment good, they are very dependent on the desire to invest into new capacity. So short term, a bit harder, but long term, we can with confidence say that this will grow roughly by 10% per year on average. And the key driver here is the fact that the humankind is generating quite a lot of data today, and that's doubling roughly every 2 years. So in a time period of 10 years, that number of data that we generate will be 32 times as big as today.
Okay.
And the raw data alone is not the thing here, but you have to process this raw data to get an actionable signal from it. So that needs more processing power, well, at least 32 times more. Faster processors are needed in order to handle this data. So there will be innovation in the future. There will be more capacity investments. So it's very, over the long term, this is a very predictable company. In the short term, not so much.
Okay. What is driving the growth, data growth that much? You mentioned 30 times in 10 years.
Yeah.
So what are the reasons there? Are we taking more pictures by phones or?
So in the past, that was definitely the case, like the iPhone and phones in general, smartphones cost a lot more data to be generated by the average person. But today, actually, machines are making the most of the growth. I think in 2016 was the first time that machines made more data than humans combined. So self-driving cars is a good example. There's a camera in every corner of a car filming in high definition every second. We got industrial robots that are generating quite a lot of processing data that needs to be processed down the line. And basically, machines are the one that are driving the growth of data today.
Okay. So in a summary, this Applied Materials as a company, it seems to be quality business. And also the outlook is quite foreseeable, at least somewhat. There will be growth. Yeah. So any risk for the investor? How do you see that?
Besides the cyclicality, the biggest risk is geopolitical. So right now there's a technological trade war going on with China because the leaders in the West have finally realized that semiconductors is the most important strategic resource going forward. And they want to limit China's ability to get this strategic resource in the future. So therefore, you can't sell advanced equipment to the Chinese. So that's going to be a problem because 1/3 of Applied Materials revenue is from Chinese customers. But on the other hand, since this is now realized being a strategic resource, that means there's more investment in the US, there's more investment in the Europe and Asia to get more independent semiconductor foundries going, which means more investments into machinery, which also benefit Applied Materials. So it's a big mixed bag of effects. Some are up, some are down.
Okay, so
geopolitics is the main risk.
In a short term, especially.
Yes.
Yeah. In longer term, there might be more chip factories in the US and Europe, and equipment manufacturers are the ones who are providing the machines.
Yeah, we know that the demand will be there. We just don't know where they will be manufactured. But at the end of the day, it doesn't matter for this company who buys their equipment, as long as someone is buying it.
Good. Thank you, Alexander. And this was a short presentation and introduction to Applied Materials business and the reasons and arguments why Sifter Fund has invested in it. And by the way, please remember, there's no recommendation to buy or sell any of the companies we have introduced in this video. It's only for the illustrative purposes we want to highlight how the Sifter Fund implements the quality investing strategy. Thank you very much for following us, and see you next time.
Remember to like and subscribe to get more material from us in the future.